we need to understand product costs versus period costs, which is a lot of what I was just talking about. A product cost includes all of the costs that are involved in acquiring or making a product. Hopefully you remember that term from financial accounting. If you are in the course, I define it, and remember the Moch example, that it's any cost incurred to obtain the product and ready for a resale. So now that we are switching into a manufacturing setting, that's going to include all of the costs of acquiring the product or making the product and readying it for resale. And again, what I was trying to explain about Mo, all of these product costs are going to attach to the unit of product as it is purchased or manufactured, and then it stays attached to each unit of product as long as it remains in an inventory awaiting for sale. And again, inventory is an asset. So again, we're going to hold the product cost as an asset on our balance sheet until we sell it. So in manufacturing, the product cost that we might see will include raw materials. So any material that goes into making the final product, work in process or WIP. I know you guys were hoping for more acronyms in your life, right? But we've got MO as manufacturing overhead WIP, and it works in the process, and that consists in units of product that are only partially complete and will require further work before they are ready for sale to the customer. So it's a type of inventory, and it's going to stay on our balance sheet until we sell it. And then we have our finished goods, which is consists of completed units of product that had not been sold to customers. So all three of these are different types of inventory. They are really subcategories of inventory. So raw materials is the type of inventory, WIP is a type of inventory, and finished goods is a type of inventory. And again, inventories and assets are assets, and all of this is stuff we have, and it's going to be an asset in our balance sheet. So what happens, the transfer of product costs, when direct materials are used in production, those costs get transferred from raw materials into WIP. And then direct labor and MO are added into the WIP. And that's what we have to do to those materials to convert it in, and those are our conversion costs, direct labor and MO, and we work on that product, and so as we work in that WIP, it becomes finished goods. So once those units of product are complete, then they are moved from WIP into finished goods. Remember that raw materials, WIP, and finished goods. And finally, when we sell it, then it's moved from finished goods to cost of goods sold. Remember that from financial accounting that we saw this week? COGS, the term COGS.
What?
The cost of goods sold. COGS. Let me write it. You will see it as COGS. Cost of goods sold. In English, you will always find that terminology. Okay, that's what it's next to the income. You have COGS. Okay, so that's an expense account on the income statement, and so I'm hoping that you kind of picture that T accounts or maybe journal entries that would be going into this. So we're using raw materials, and those raw materials will move from raw materials into WIP, and then we're going to add in our direct labor and our MO into WIP as we work on the product, and then when we finish it, it goes from WIP to finished goods, and then when we sell it, it goes from finished goods, which is an asset on the balance sheet, and then we finally transfer it to COGS, to the cost of goods sold. And let's go further into that. So what's happening here, the product cost, including to those direct materials, direct labor, and MO are all sitting as inventory on the balance sheet. And then when we sell it, it goes into cost of goods sold, the expense account on the income statement. And that's an important thing to remember, because it's an application of the matching concept that I just talked about. You know that we will use the matching concept, which is one of my favorite gaps, because I trust that you have been waking up every day and reciting the matching concept as you spring out of it in the morning, and that's what we are going to use the whole course. So for those that you are not in my financial accounting class, let's review the matching concept real quickly. So the matching concept has three parts. First, we want to match our revenue to the period in which it is earned. Second, we want to match our expenses to the period in which they are incurred. And the third part is the one that applies here. We want to match our expenses to the revenues they generate. Okay? Everybody okay with the matching terminology?
Yes.
Perfect.
Yeah.
So what we're doing here is we don't expense all the product costs to COGS until we have a sale of the product. So we are matching the sales revenue to the cost of goods sold. So we are going to do them at the same time, and we don't want to just immediately expense everything. We want the COGS to match to the sales, and we'll deal with we will deal with the journal entries later. But I'm hopeful that you all remember your journal entries, particularly from the chapter 1 in financial accounting, where you learn how to record sales entry with your cost. So everybody remembers that part? Yes? No? Too much terminology, guys? Is the homework we have on Brightspace about these concepts? Wait. The financial accounting, it's not about these concepts. It's more focused towards knowing the concepts that we have seen for the financial statements.
No, but we have another, like we have two homeworks due Sunday that are called chapter 1.
Oh, yeah. Regarding managerial accounting, yes, the quiz and the homework will be regarding these terms.
None of them, and sorry, so you can continue. None of them have a description of exactly what we are supposed to upload.
Yesterday you uploaded the homework from financial accounting. If you take a look, it will be there.
I think the descriptions are in contenido, in the chapters and in the videos we have to watch, I guess.
Yes, this will be uploaded into your videos, and obviously you can take a look at them in order to pass the quiz, and that's it. But the great or the interesting part in here, guys, please, these are terminologies. You have to take a look at them, give them a nice time to understand them, because at the end, all the semester will be based in these terminologies. Okay. Everybody good? Okay, thumbs up.
Professor, where's the description of the homework?
You have it in module 1. At the end of the week, it comes the foundation activities folder, and you have the live sessions that I have recorded, and also you have the homework and the quiz.
Okay.
Remember, the quiz, only it's a matter of passing the quiz. I want, actually, it was part of why I got a little bit of more time in the previous course of financial statement analysis with one of your classmates, because we can further develop some concepts that we need for further chapters. And as I told you, starting from now, we will keep moving on really quickly with terminology. And I know that you guys already manage the income statement. I will introduce you to new income statements of a new presentation, new way of presenting income statements. Okay. Let's move on. Yes. Thumbs up. You're not falling asleep.
No.
Just start. He's already slept.
What? Okay, perfect. Let's move on, guys. So that's the product cost. And then we have, as you are watching, you have period costs. And these are all the costs that just expense in the period in which they are incurred. So that that would include all of our selling and administrative costs. And we expense them in the time frame in which they happen and the accounting period in which they are incurred. So that's an application of the second part of the matching concept that says that we want to expense or we want to match our expenses to the period in which they are incurred. So we are definitely following the matching concept here, but different theories where product costs get expensed when we make the sale, and the period cost gets expensed in the period, in the time period that they belong